These are the 10 Florida cities where condo prices are falling the fastest right now. And for anyone who's been priced out of the market over the past few years, what's happening could be the opportunity you've been waiting for. Florida condo values dropped 9.9% in the last 12 months, which marks the biggest one-year decline since 2009 during the Great Recession. Some cities on this list have experienced even steeper drops, with a few markets seeing declines approaching 20% or more. This isn't a random market correction, though. A specific chain of events triggered this crash, and it all traces back to one tragic night in June of 2021 and the massive regulatory changes that followed. By the end of this video, you'll understand exactly what's driving these price drops, which cities are seeing the steepest declines, and whether this crash represents a genuine buying opportunity or a warning sign to stay away. At approximately 1:22 in the morning, Champlain Towers South, a 12-story beachfront condominium in the Miami suburb of Surfside, partially collapsed and killed 98 people. It stands as one of the deadliest structural disasters in American history. The building opened in 1981, and warning signs had appeared for years before the collapse. A 2018 engineering report flagged major structural damage, describing abundant cracking and crumbling of support-bearing columns. Engineers documented the problems again in April 2021 and noted conditions had grown much worse than before. The association had approved a $15 million repair program before the collapse, but the main structural work never started. That tragedy convinced lawmakers, legal professionals, and federal mortgage lending agencies that new laws were necessary to ensure condo associations maintain adequate reserves and perform safety-related repairs. The Florida legislature responded by passing Senate Bill 4D in May 2022, and Governor Ron DeSantis signed what became known as the Florida Condo Safety Act into law. Here's what changed under the new rules. Florida now requires milestone inspections for condominium and cooperative association buildings that are 3 stories or higher when they reach their 30th year, with additional inspections required every 10 years after that. Condo associations for buildings with 3 or more stories must file inspection reports focused on structure, maintenance, and expected repair costs. The grace period for these strict new condo safety laws officially ended on January 1, 2026. Under House Bill 1021 and the 2022-2023 safety reforms, nearly all residential condominiums 3 stories or higher must now maintain fully funded reserves for structural repairs. For decades, many associations had voted to waive these reserves to keep monthly dues low. The bill for all that deferred maintenance came due all at once, and that's where the crash begins. In Miami-Dade County, the median monthly condo association fee jumped nearly 60% between 2019 and 2023, climbing from $567 to $900. That increase happened before the full impact of the new laws even hit the market. By 2025, average monthly assessments for high-rise condos in Miami-Dade had climbed above $1,900 a month, and that covers just the HOA fee without including your mortgage, property taxes, or insurance. Rafael Corrales, a Redfin Premier agent in Miami, described the situation this way. Many buildings, even those without amenities, now have HOA dues north of $1,000 a month. Tampa experienced the steepest HOA increase among 43 U.S. metro areas that Redfin analyzed, with fees jumping 17.2% year over year as of July 2024 to reach a median of $614 per month. Orlando and Fort Lauderdale trailed close behind with increases of 16.7% and 16.2% respectively. The HOA increases only represent part of this story, though, because the special assessments have delivered the bigger shock. A special assessment functions as an additional fee charged by the condo association, separate from regular monthly fees, and usually covers substantial expenses like major repairs. Since the new laws require buildings to actually fix their structural problems and fully fund their reserves, these assessments have devastated many owners financially. At one building called Surfside Club South in Ormond Beach, residents received bills exceeding $100,000 per condo owner. Janet Stone, a retired teacher who lives there, told a news outlet, "I'm a retired teacher, so we don't have hundreds of thousands set aside somewhere that we can contribute. It put me in a position where I needed to return to work. Other buildings have demanded equally shocking amounts from their owners. Before the Champlain Towers collapse, that building's association had approved assessments ranging from $80,190 for a one-bedroom unit all the way up to $336,135 for the four-bedroom penthouse. One real estate professional summed it up bluntly. Some of these places have a $50,000 special assessment due within a few months. How can someone on a fixed income pay for that? So ultimately, they're going to be forced to sell their unit at a lower value. That's exactly what's happening across the state right now. Condo inventory for sale in South Florida has more than doubled since the first quarter of 2023, reaching more than 18,000 units as people flood the market with their condos because they simply cannot afford to stay. A condo advisory group representative explained the pattern. Communities that have no reserve money, not done repairs, and basically done everything on the lowest cost method they can, are now faced with huge increases to cover those costs. Insurance adds another layer of financial pressure on top of everything else. Insurance costs have burdened many Florida homeowners, with premiums rising by over 40% in some areas. One Spectrum News report revealed that a Longwood community saw its annual insurance premiums jump from $91,000 to $233,000 within a single year. The median U.S. premium rose 33% over the past 3 years, but Florida homeowners have faced significantly larger increases due to outsized hurricane exposure, rising replacement costs, and a volatile reinsurance market. Annual premiums now exceed $10,000 in some parts of the state. The proportion of a condo unit's monthly fees going toward insurance climbed 25% to $377 a month, and the average high-rise condo owner in Fort Lauderdale and Palm Beach paid $438 a month just for their association's insurance coverage. When you add it all up, the combination of skyrocketing HOA fees, massive special assessments running into six figures, and insurance premiums that have doubled or tripled creates an impossible situation for many owners, especially retirees living on fixed incomes. Tim Harper, a Redfin Premier real estate agent in the Orlando metro area, described what he's witnessing. The Florida condo market is in uncharted territory. We're seeing a massive influx of condo inventory because a lot of senior citizens on fixed incomes can no longer afford their monthly payments, and a lot of other condo owners just want to move because they're tired of dealing with rising HOA fees and special assessments. Hurricane Ian slammed into southwest Florida on September 28, 2022 as a Category 4 storm and caused an estimated $112.9 billion worth of total damage, according to the National Oceanic and Atmospheric Administration. That made Ian the third costliest U.S. hurricane on record and the costliest in Florida's history. Markets like Cape Coral and Punta Gorda took direct hits from Hurricane Ian and saw thousands of homes damaged, which created an enormous need for renovations across the region. FEMA began re-evaluating the risk of homes in several southwest Florida communities following the hurricane, and recently announced it's pulling Cape Coral's long-standing discount on flood insurance. A research group called First Street found that Cape Coral has more properties at risk of flooding than any other city in Florida, and a map of the area explains why. The city contains 400 miles of canals that give many homes direct access by boat to the Gulf of Mexico. All that water also means that when a storm comes through, flooding becomes inevitable, and the canals themselves become a source of that flooding. This combination of increased housing supply from damaged homes, along with strained demand from higher prices, higher mortgage rates, higher insurance premiums, and higher HOAs, has translated into significant market softening across much of southwest Florida. Listing prices in Lee County, which includes Cape Coral and Fort Myers, remained about 7.5% lower than pre-Ian levels as of May 2025. With all of that context established, let's count down the top 10 Florida cities where condo prices are crashing the fastest. Number 10. JacksonvilleRealtor.com projects. Jacksonville will see a 1.4% price decline in 2026, which sounds modest compared to some other cities on this list. Jacksonville actually recorded the biggest condo sale price drop among cities Redfin analyzed, though. with prices falling 6.6% year-over-year in July. The city also ranks among the 5 most oversupplied condo markets in Florida right now, with more sellers than buyers putting constant downward pressure on prices. Number 9. Orlando. The Orlando-Kissimmee-Sanford metro area faces a projected 1.6% decline in 2026. HOA fees in Orlando climbed 16.7% year-over-year, and nearly half of all listings, at 48.7%, have seen price cuts. The median original list price of a condo in Orlando sat at $238,710, down about 0.5% from the year before. Orlando holds one advantage over other markets on this list, with a relatively tight inventory at around 2.7 months of supply, which runs much lower than some of the other markets we'll discuss. The trend still clearly favors buyers, though. Number 8. Palm Beach. Palm Beach County experienced condo values dropping 11.4% year-over-year. West Palm Beach condos specifically sold for an average of 12.3% less than a year earlier. One young condo owner explained to a news outlet that the super overwhelming future assessment fees, which had been jacked up to several hundreds of dollars per month, already pushed him out and forced him and his fiancée, a nurse, to put their unit on the market. Palm Beach County condos and townhomes saw median prices actually increase 3.3% to $315,000 in one recent report, rebounding from a low of $285,000 in August. Inventory still rose to 9.1 months of supply, though, up from 8 months a year ago, and Palm Beach remains one of the hardest-hit markets overall despite that improvement. Number 7. Broward County and Fort Lauderdale. Broward County, which includes Fort Lauderdale, saw condo values drop 11.9% year-over-year. Fort Lauderdale condos specifically sold for an average 11.3% less than a year earlier, and the median sale price for condos and townhomes in Broward County dropped 7.5% to $259,000. That represented the largest decline in the South Florida region. HOA fees in Fort Lauderdale climbed 16.2% year-over-year, and the market has experienced a significant increase in inventory as sellers try to get out before facing even larger assessment fees. Number 6. Sebastian recorded condo values dropping 11.9% year-over-year, matching Broward County for the 6th steepest decline among Florida markets tracked by Reventure Consulting. Sebastian sits on what's called the Treasure Coast on Florida's east coast north of Palm Beach. It's a smaller market, but it's experiencing the same pressures as the larger metros, with rising HOA fees, insurance costs, and the new reserve requirement squeezing owners. Number 5. St. Petersburg. St. Petersburg saw condo prices drop approximately 28% from their peak, according to one analysis, which places it among the steepest peak-to-present declines in the entire country. Year-over-year, St. Petersburg home values declined by 5.9% in 2024, and early 2025 data shows a further annual decline of 6.5%. Zip code 33716 recorded the steepest drop, with home values down 13.7% year-over-year. One St. Petersburg condo perfectly illustrates what's happening across the market. A unit at One Beach Drive saw its value fall 49% over the last 10 years, according to its Zillow listing. In 2016, the unit carried a value of roughly $489,000, and now it sits at $249,000. In 2022, the same property had a market value exceeding $1 million. The explanation for such a dramatic drop comes down to building conditions. An analyst explained, "This is because in its building in downtown St. Pete, they found $45 million in needed repairs. The building was built in 1975, and post-Surfside collapse, many of these older properties are being caught up on deferred repairs from the last couple of decades." Realtor. Come forecasts project the Tampa-St. Petersburg Clearwater metro area as a whole will see a 3.6% price decline in 2026. Number 4. Northport and Sarasota. Northport and the Sarasota area recorded condo values dropping 12.2% year-over-year. The median original list price of a condo in North Port specifically sat at $341,997, down 11.2% from the year before. North Port faces a projected 8.9% price decline in 2026. This area attracts retirees and those seeking a lower price point than Sarasota proper. But markets that surge fast tend to correct fast, and that's exactly what's playing out here. Sarasota carries about 5.5 months of inventory, which indicates a buyer-friendly market. Number 3. Tampa recorded condo values dropping 12.3% year over year. Tampa sellers led all Florida metros with 54.9% of listings reducing their prices, which means more than half of all sellers cut their asking prices just trying to move their properties. HOA fees in Tampa jumped 17.2% year over year to reach a median of $614 per month, making it the steepest increase among 43 U.S. metro areas analyzed. Nick Gurley, a real estate analyst and CEO of Ruvox Consulting, expects Tampa Bay home prices to dip about 4 to 5% in 2025, with some harder-hit areas seeing declines of 10%. He stated, "We will see a correction somewhere in the 4 to 5% area. In some of the harder-hit areas, maybe 10%. Number 2. Cape Coral. Cape Coral recorded condo values dropping 14.2% year over year. Zillow data shows the median home value for the Cape Coral-Fort Myers metro area declined by 10% over the past year as of October 2025. And Realtor.com forecasts Project Cape Coral facing a further decline of 10.2% in 2026. Fox 4 now ranked Cape Coral last among 123 mid-sized cities in the U.S. in their July 2025 hotness ratings chart, dead last in the entire country. Dr. Selma Hepp, chief economist at Cotality, warned of housing market headwinds and identified that Cape Coral's 6.5% year-over-year price decline in April 2025 stands out against national growth of 2%. Hurricane Ian absolutely devastated Cape Coral, with the storm causing an estimated $112 billion in total damage across southwest Florida. Cape Coral also has more properties at risk of flooding than any other city in Florida, according to that First Street study. The city of more than 200,000 people could never be built today under current regulations. Back in the late 1950s, developers bought a 100-square-mile peninsula near Fort Myers, bulldozed mangroves, drained wetlands, and dug hundreds of miles of canals. Marketing materials promoted it as a waterfront wonderland. For retirees relocating from the Northeast and Midwest, Cape Coral offered an advantage over places like Sarasota and Miami because prices were cheaper. Those prices are falling now for good reason, though. The cost of home ownership in Southwest Florida has increased dramatically and pushed people away from those coastal areas. The combination of sky-high insurance premiums, hurricane damage, and the new condo regulations created a perfect storm of financial pressure. One resident who moved to Cape Coral from New Jersey saw his insurance rates climb significantly after Hurricane Ian. He explained, "The insurance industry has been tough on people here in Cape Coral. There are significant raises in rates, and I think it's one of the burdens that people have to really contemplate. Can they afford it?" Number 1. Punta Gorda. The Florida city with the fastest falling condo prices is Punta Gorda, where values dropped 18.6% year over year. Nearly $1 in $5 of value vanished in a single year. Punta Gorda stands as a clear example of a market where home prices outran true value, with condo prices falling 11.4% and single-family home prices declining 7.3% year over year as of early 2025. This correction reflects how pandemic-era price surges, rising insurance costs, and new regulatory pressures exposed underlying weaknesses in overheated Florida markets. Like Cape Coral, Punta Gorda took a direct hit from Hurricane Ian in September 2022. The combination of increased housing supply from damaged homes along with strained demand from all the factors we've discussed translated into severe market softening. These individual city numbers fit into a broader context that shows the scale of what's happening. Florida condo values dropped 9.9% in the last 12 months, marking the biggest one-year decline since 2009. In the first half of 2025, median listing prices for condos fell a significant 10.8% compared to the same period in 2023. while single-family home prices in Florida saw a smaller decline of 3.6% over the same time frame. Condos are getting hit much harder than regular houses. Condo inventory now exceeds 9 months of supply, with some estimates putting it at nearly 10.3 months. A month's supply measures how long it would take to sell all the homes currently on the market at the current sales pace, and anything over 4 to 6 months indicates a balanced market. 10 months clearly favors buyers. Dr. Brad O'Connor, the Florida Realtor's chief economist, stated it plainly. Looking at months' supply for condos and townhouses, it's pretty clear we are in a buyer's market, at least at the statewide level, with 9.7 months of supply. Buyers have gained an advantage here, and sellers increasingly will have to concede on price if they want to move their properties. In August 2025, 72.3% more condo sellers than buyers existed across the U.S., according to Redfin. The condo market experienced an oversupply for 5 consecutive months and reached its widest gap of 81% in April 2025. 5 of the 10 most oversupplied condo markets in the entire country sit in Florida: Miami, Fort Lauderdale, West Palm Beach, Tampa, and Jacksonville. Florida's housing inventory surged to a record 177,000 homes for sale as of 2025, which exceeds the active home listings in the entire Northeast United States combined. Florida holds a significant position in the U.S. housing market because the state contains roughly 1/5 of all condos in the country, which means what happens to Florida condos carries implications for affordability and the broader real estate sector nationwide. Realtor.com forecasts project a 1.9% average decrease in median sales prices for existing homes and condos across Florida's 8 largest metro areas in 2026. That runs notably lower than the expected national gain of 2.2%, which means the rest of the country expects price increases while Florida expects prices to continue falling. Miami stands as the only major Florida market projected to see a positive gain with an estimated growth of 1.1%. Miami's resilience stems from international buyers and sustained demand for its lifestyle. Every other major Florida market faces negative forecasts, though. Cape Coral faces a projected decline of 10.2%, while Northport is projected at 8.9% down. Tampa faces a projected 3.6% decline, while Orlando is projected at 1.6% down, and Jacksonville at 1.4% down. One analyst summarized the situation. The Florida market is in a precarious situation as supply and demand continue to fight it out. I would not expect this trend to end anytime soon, as interest rates have normalized and prices remain high. He added that Florida residents should expect the trend of declining condo values to persist for the rest of 2026 or even beyond. TD Economics expects conditions in Florida's condo market to remain weak over the next several quarters, but believes improvement in a few underlying factors could help the sector begin regaining traction by late 2026. The case for buying is straightforward. The window to negotiate better condo deals is wide open if you're a buyer who can afford it. Prices have dropped significantly from their peaks, and you have more inventory to choose from than at any time since 2020. Sellers are motivated and willing to negotiate, and in some cases, you can get a condo at a significant discount compared to what it would have cost 2 or 3 years ago. One analyst noted, "A lot of people are going to finally see more affordable home prices, and they're going to see more options on the market in terms of more inventory, and so this is actually great news for local home buyers who have been priced out." He added an important caveat, though: it's still going to probably feel expensive for the next year. Serious warnings exist on the other side of this equation that you need to hear. First, prices may continue falling through 2026, according to multiple analysts. Buying now could mean watching your investment lose value before it stabilizes. Second, and this matters more than most people realize, the purchase price only represents part of the cost. You need to understand the total cost of ownership before buying any Florida condo. That means investigating HOA fees, which can run over $1,000 a month even in buildings without amenities. It means understanding any pending or potential special assessments, which can run into the tens of thousands or even hundreds of thousands of dollars. It means getting quotes on insurance before you commit to anything. A bifurcation is happening in the market right now. Sales of condos in buildings less than 25 years old increased 2% last year, while condo sales in buildings more than 25 years old fell 6%. Newer buildings that already meet the updated safety codes are holding their value better than older buildings that face expensive renovation requirements. For condo purchases specifically, scrutinize HOA financials closely for deferred maintenance and potential special assessments, and request financials and inspection reports from the condo association before making an offer. One couple learned this the hard way when they bought a condo and then got hit with a six-figure special assessment just 2 years later. The first red flag, they explained, appeared when banks refused to give them a mortgage unless they made a 25% down payment since the building had no reserves. If a bank is requiring unusual down payment terms because of the building's financial situation, that should tell you something about the risk you're taking on. Multiple analysts have made clear that what's happening in Florida does not repeat 2008. Lending standards have been much stricter this time around, and there isn't a massive overhang of distressed properties with bad mortgages the way there was during the subprime crisis. This situation is better described as a necessary market correction and normalization after an unsustainable boom. The key difference from the national picture is that Florida's adjustment started from a much higher peak and faces influence from unique Florida-specific costs like insurance. Florida home prices shot up faster than almost anywhere else in the country during the pandemic. Prices in some markets soared by more than 60% from 2020 to 2022. That kind of appreciation was never sustainable. The combination of higher mortgage rates, skyrocketing insurance costs, the new condo safety regulations, and the aftermath of Hurricane Ian has now revealed which markets were fundamentally overvalued and which were built on sustainable foundations. The Gulf Coast regions, particularly Cape Coral, Punta Gorda, Northport, and Tampa, are experiencing the most significant price adjustments. These areas saw substantial price increases during the boom years, and a correction was likely inevitable given how fast they grew. Miami's resilience shows that not all of Florida is created equal. Markets with strong international demand, limited land availability, and diverse local economies are holding up better than markets that grew too fast on speculation and cheap money. The Florida Realtors Trade Association has listed upholding condominium safety and affordability as one of its 2026 legislative priorities. Additional reforms may come that provide some relief to condo owners, but the fundamental reality of aging buildings needing expensive repairs isn't going away anytime soon. These are the 10 Florida cities where condo prices are crashing fastest in 2026. Punta Gorda leads at negative 18.6%. Followed by Cape Coral at negative 14.2%, Tampa at negative 12.3%, Northport and Sarasota at negative 12.2%, Sebastian at negative 11.9%, Broward County and Fort Lauderdale at negative 11.9%, Palm Beach at negative 11.4%, St. Petersburg with prices down as much as 28% from the peak, Orlando projected at negative 1.6%, and Jacksonville projected at negative 1.4%. The crash traces back to the Surfside tragedy of June 2021 that killed 98 people and exposed decades of deferred maintenance across Florida's condo stock. The laws that followed are forcing buildings to finally fund their reserves and make necessary repairs, and that's causing massive financial strain on current owners. The insurance crisis, Hurricane Ian's aftermath, and the general cooling of the housing market have combined to create conditions that favor buyers more than at any time in over a decade. If you're thinking about buying a condo in Florida, this is arguably the best negotiating position you'll have in years. Go in with your eyes open, though, and investigate the building's finances, understand the total cost of ownership, and prepare for prices to fall further before they stabilize. If you're a current condo owner facing massive assessment fees and you're considering selling, you're not alone. Thousands of other owners are making the same calculation, which is part of why prices are falling. The question becomes whether you can afford to wait out the storm or whether cutting your losses now makes more sense. And if you're just watching the Florida market from afar wondering what's happening to the Sunshine State, now you know. Florida condos are experiencing their biggest decline since the Great Recession, driven by a perfect storm of regulation, insurance costs, hurricane damage, and the end of a speculative boom. The market is correcting right now. For some owners, that's a disaster. For others, it might finally represent a chance to afford a piece of Florida.